Morning all, how are we doing? How's everybody? We just check the we are live. Yes, good. How's everyone doing? All good? Got some movement on oil this morning, finally. Just had a reversal alert on M15. Just taking a couple of aggressive positions on this. We had an alert this morning on M5. And we just had the reverse alert on M15, and we got some bullish movement. So just getting in a couple of aggressive positions on oil. Try and get on top of this drop at the moment. Quite a few ADRs as well this morning. So busy old week this week. I knew this was going to be a tricky week, but blimey, some really big moves, which is good, depending on which side you're on, obviously. Morning, Themba. Morning, Evil. Morning, Emra. So basically, we've got a couple of levels here on oil to look at. Potentially this morning, we've got yesterday's low, which potentially could cause a problem, and then we've got this low here, which potentially could cause another problem. If we break that, we're running into this accumulation, which was basically the entire New York session yesterday after the drop, which we then got to try and break through. So the aggressive positions that I've got on this are designed obviously to bring my ADR average down. And I'm looking to get out in this gap here, and then a second position up here. So I'm looking basically for a big unwinding on oil at some point. Morning, Shout. David, Jeff, because we're down at 85, which is kind of the low, which is these levels here. Before the run-up started, we smashed through these levels, and obviously we had Ukraine, and then since Ukraine, this is the lowest price we've had since the Ukraine war kicked off. And we're coming back down into potential support here. So this is a key level here that we're at right now, and looking for some support somewhere around this 85 level, which is kind of a psychological level. So we'll see what happens. We're either going to get it or we're not. If we don't, I don't know how low this is going. So it's a bit tricky to sort of know what's going on with it from a fundamental perspective. We've had nothing but positive fundamentals. We've had barrel production reduced, we've had supply interruptions, everything that normally would fundamentally point towards a rise in prices of any commodity, and it's doing the opposite. So there's talk about this being scarcity by the market based on demand dropping. So when there's a recession, obviously people spend less money. So people are looking after their money a lot more carefully. They're not doing journeys as much, which has less demand on petrol, which obviously is oil's main sort of driving force, if you like. Excuse the pun. So there's a lot of speculators which are thinking that oil may come down when we start a recession. We haven't started recession yet, so this seems to be a precursor possibly to what they're expecting to happen when the recession kicks in, which is a little bit soon, I think, but the market does what the market does. So down here, looking to get some aggressive positions on, which I have done this morning, and we'll see where they go. Stops under the low there, and 84, 82. So 85 is kind of the magic number. I'm just under 85. So if it breaks 85, I want to be out, basically. So if we get down there, I'll stop out on those two. But if we are going to use this as our low, then that will be where I'll go from. So we'll see what happens with that one. US dollar Swiss as well. I've got a couple of aggressive positions on this one, which I put on yesterday. Ignore that. Brokers up to the usual. I had a conversation yesterday about brokers and in the Telegram group about brokers and manipulation. There is no broker out there. My Forex funds is as bad as RoboForex, is as bad as Axie, is as bad as DarwinX. DarwinX is probably the best broker I've ever had in my 13 odd years trading. They still manipulate, and it's not always manipulation. Sometimes this is genuine slippage. Sometimes there is genuinely large orders placed and there is just no liquidity to fill it. So there's lots of liquidity providers out there. All brokers use different liquidity providers. They all use the dark pools. If there's no liquidity, there's no liquidity. You're going to get this sort of thing happening. Best way to tell is to look at it on multiple brokers. If you see a similar thing happening on multiple brokers, it's genuine liquidity slippage. If you see different things happening on different brokers, one of them is more than likely manipulation. Morning, Wilson. Morning, Duke. So yeah, pretty good slippage there overnight on the US dollar Swiss. So I put these aggressive positions on US dollar Swiss yesterday, one there and one there. Stops were above the highs in this zone that I identified. So it's that high and that high there. This area is basically potentially where we're going to maybe come for a liquidity run. It's quite old though, so there's not likely to be a lot of liquidity up there. But this is where we stepped in after the drop on the Swiss franc increase, and we found sellers. We're coming back there for the first time. We've found sellers 3-4 times now. You look at this on the hourly chart. We came into that area, sellers stepped in. We came back up, retested it, sellers stepped in. We came back up again, retested it, sellers stepped in. We've come up again, retested it, sellers stepping in. So this is the 4th attempt on this. At some point, this is going to collapse. It's going to give up, or it's going to smash through there. So either these sellers are going to give up the ghost, and obviously their liquidity is sitting up here, and buyers will take that liquidity, and as soon as they've got it, they'll go with it and they'll run. That'll be the end of it. Or the buyers are going to give up trying to get through there, and they will jump ship and puke, and we'll go the opposite direction. So one of those two things is going to happen. So I've got these aggressive positions on. Again, just to try and get on top of it. I'm not overly worried about my drawdown. This isn't great, this one, because we've had this big, strong push and we've gone into accumulation. So this hopefully will be the last spring and run before the drop. If not, then obviously, yeah, I'll have to deal with it. But yeah, to try to get into some aggressive positions up there just to bring the average up. I'm looking for 1 day of movement. 1 day. At the moment, the market is just squeezing really hard. So you've got a couple of those on. Yesterday, I banked 0.5% in the end because I had, where are we? What's the date today? 7th, 6th. So yesterday, banked 0.5%, which was DAX. I had a little scalp I did on DAX yesterday, which didn't work out, which is why I made a loss yesterday. So I had a little scalp that I took on this pullback. So I had this position which I took off nicely. We came back up and dropped. We came back up and we took that liquidity there. And Stodd's law, this is why stops are just the most annoying things in the world, as we know. Took that liquidity. So I saw them take that liquidity. I got in with a short. They came up and took the liquidity and then ran with it. I obviously got stopped out. So yeah, so I took that one. That was DAX yesterday. So I had one position there. I took one position basically to see if I could double up on that one, and it didn't work out. So yeah, US dollar Swiss is the only thing banked yesterday, which was a couple of tiny little positions at break even, and the pound odd. So the pound odd basically is pretty much all I made my money on yesterday. Oil, I had 3 positions closed out. Aggressive positions closed out in loss. So these were aggressive drawdown control positions which failed. So that's why the P&L this morning is 1% down. So got a bit of making up to do. Hopefully oil will do that. And obviously US dollars. So we'll see what happens today. That's where I am. got about 7.5%. So I'm getting close to where I'm thinking some of these may be wrong long term, maybe not, don't know. Today and tomorrow is going to be quite an important one. News-wise, today we've got at 10 o'clock, we've got the monetary policy report hearings for the pound. So we could get some volatility off the pound on that. We got the Canadian rates forecast at 3.25. So they're putting a 0.75 basis point increase on. So we'll see if that comes out as expected. If not, we could get some decent volatility on the CAD and also on the US dollar. They're linked. We've got IVPMI on the CAD this afternoon, and then we've got a couple of talking heads later. So we won't worry too much about those, but you never know. They may come out and say something. So the main news today is the Canadian rates, which is half an hour after the New York Open. Tomorrow morning, we've got low speaking, and then 1:15, we've got the big one, which is Euro. Again, they're going for 0.75 tomorrow. We've got the ECB press conference straight after that, and then we've got Powell speaking. So tomorrow, this is what I'm obviously the most interested in. That will be the initial reaction we will get. So with the Euro pairs, if this comes out more than 1.25, I would expect to see a fairly big increase in the Euro, a big spike up. The ECB press conference could calm that situation down or rally it further, depending on what Lagarde says. But then after that, we will have the US reaction to that increase, which could move everything. So for me, tomorrow, Powell is possibly the most impactful thing that we're going to have. May or may not happen, and it all really depends what happens with the rates. Don't forget, they all know what the rates are going to be. We don't, but they all do, because they had a meeting last week about it. So, it's not hidden away, but equally, until that number comes out, it's not confirmed for the market. So the market's not going to move until then. There's a gap fill just happening on the DAX, by the way, which I'm trading on my other account. Just in case you didn't get on that one this morning. Just about to fill. I'm just trading that one at the moment. Morning, Stevie. So there's news. So that's everything we've got today. So 10 o'clock this morning, pound, and then obviously this afternoon, 3 o'clock Canadian dollar rate. That's going to be the big one today. So the market's going to be waiting for that to come out. We've had some serious volatility on the yen and quite a few things. So there's a lot of news at the moment. You've just got to be really on top of. Just had there, that's German output. What's happened with house prices? Starting to flatten out. I'm just interested in the house prices, obviously, because I live in the UK. So we're flattening out. 11.8 previous, 11.5. This is a sign of recession, obviously. House prices flattening, and then declining, and then recession kicking in, and then collapse, bubble bursting. So it's all leading towards a recession, isn't it, at the moment? Just seeing what else goes from. Okay, right. So this is what I was looking for. A reaction from Japan to what happened yesterday. So obviously yesterday we had 250 ADR plus moves on the yen. I was waiting for. I was looking. First thing I did this morning, opened up the news to see if we'd had any reaction from Kuroda, which we have. So there's nothing come out. There's a lot of talk from Japan, but nothing red saying that they're going to do anything about it. But obviously, what we saw yesterday with those yen pairs, and what we've also seen this morning with these ADRs, everything ADR is hit again on the yen. The yen is in an awful trouble at the minute. So we had that big move yesterday. So I don't know what's this Aussie dollar. So there's 100. That was only 100 ADR. Things like the pound yen We had a strong pound yesterday. From the gates in Asia, it went, and we went up to 320 pips on 130 ADR. So, you know, these are massive 250 plus ADR moves on some of these things. And again, this morning, we've already got an ADR hit on the pound yen. We're over 100. Swiss yen, we're 125 this morning. Something's happened. I don't know what this is because I can't see anything, any red news that is fundamentally bad about the situation in Japan. You know, it's business as usual. They haven't done anything that is changing. I think they will do now, obviously, because they've got to protect their currency. But yeah, massive moves on all the yen pairs. As I say, I've been longing or looking for opportunities to get long on all yen pairs for absolutely ages. Struggle to get in because there's very little pullbacks, and then we're getting these huge moves which just come out of nowhere. And we're having another one now. I mean, look at the ADR on this, the RSI, 89. Yeah, so we're up on these yens now into, you know, stupid territory. We don't get this column light up very often. This one fairly rare. This one very rare. This one once a year maybe. We don't get this. We had it on the euro last year. That's it. Doesn't tend to get up to these levels. So when we do get up to these levels, however, we tend to get the mother of all pullbacks. Yeah. So at some point, we are going to get a huge profit take move on this. But there is also an opportunity here for Kuroda and Suzuki and this lot all to step in and just literally say, right, this is what we're doing. And we're going to sort this situation out because they've got to do something about it. But we've been saying this for months and months and months. I've been sitting here waiting for Kuroda to do something. It hasn't done it. So we're at a point now where the yen is getting so devalued. It is getting to not so much a bankruptcy point of view, but where if they don't do something about it shortly, I don't actually see a way out of it for them. They're constantly buying the yen up to try and pump it up, and they're not. It's just going down. So all they're doing is they're buying up tons and tons and tons of stuff. Imagine going into a shop and buying every loaf of bread, knowing full well in 3 or 4 days' time that's going to be utterly worthless because it's going to go moldy. What they're doing is they're buying up something, the yen, constantly, which is devaluing massively. So all they're doing is they're adding to their debt every single day. And when things like this happen, it prompts these sorts of comments. The moves are one-sided. I am concerned. We will take action. Trouble is, they haven't got any action. They're trying their hardest to dig themselves out of it by pumping their currency, and it's not happening. Yen used to be a safe haven, not anymore. When the world goes into recession, there is no such thing as a safe haven. You can't put your money anywhere, so you take it out. And I think what we're seeing here is potentially a precursor to the euro rate, because this is the one that we've been waiting for. This is the weakest currency for years, actually now potentially starting to do something and try and get itself on top of inflation. So we may see strength starting to come through on the euro, and tomorrow's going to be whether or not they actually do something decent about this or not. We may see money coming out of the yen ready to be pumped into other areas. Also, the stock market is having a really bad time, obviously, at the moment. So there's money coming out of stocks. There's a lot of shifting going on, basically. So everything is massively volatile, as we can see. You know, everything's coming down like a house of cards at the moment. So yeah, yen, who knows what's going to happen with that one? But these are opportunities. Things like the US dollar yen, you know, after having an ADR hit like that. So yesterday we did 280. So we did about 225 ADR. We've already done 150 ADR today. Look at the pullback. Yeah, we're just not getting anything. Everybody that's gone long here at some point is going to take a profit on this. When they're going to take a profit, though, is the big unknown, isn't it? So there are opportunities for shorting these, but they're tricky. Sorry, one second. I just got to put a trailing stop on my DAX trade. 280. I just wanted to get out of that. That DAX fill, I think that's probably done. Sometimes when we're doing these fills, we go to the pip. Other times we kind of get to, if you get one of these sort of lows where we were trading a lot, quite often we get to those lows and we go from there. And I've got the feeling we're going today. So I just didn't want to get that come back and take me out of break even. So yeah, so going back to the ends, who knows? Morning, Sammy. Morning, Neo. Can't remember if I said hello. Wilson, pound yen continuation play today. It's happened already. We've had it. So I don't think I'm certainly not comfortable going long on anything yen. Not after this sort of move. The continuation play was during Asia. You had to get onto it yesterday, but you know, again, getting onto it after an extension like this, normally you'll get some kind of pullback. But remember what I said yesterday, ADR extensions will do one of two things. They will either, well, one of three things. They will either push and retrace with an A-shaped recovery. They will push, accumulate and push, or they will push, accumulate and drop. We've had, remember I said yesterday, there's a 66% chance after an ADR hit that you will get a favorable return, because you will either get that happen, or you will get that happen, or you will get that happen. In this case, it's the 33%. It's continued up. That's trading. That's odds. And now it's gone and bloody done again. Typical. Oh, it just got out of it. There we go. There's a gap fill done. So yeah, who knows what's going to happen with these today. I'll be interested to watch and see what happens with it. But I'm not really interested in shorting the yen. I don't see how they can get out of this problem they've got at the moment. They need some intervention somehow. They need every currency in the world to suddenly weaken massively and then have a little bit of strength from somewhere, and I just can't see where they're going to get it from. They're a massive manufacturing and export country, and what do we do in a recession? We stop buying stuff. It's going to have a massive impact on their economy if we go into a recession, and their currency is already on its knees. So I just don't want to get involved in anything short on the yen, i.e. longing the yen. I do think the market will take a profit on the move. What worries me is what that profit take will be. If this is long-term speculation getting involved here, i.e. the guys that are trading the higher time frames, yeah, that are getting in and getting in and getting in, where are they going to get in next? And how much profit taking will you get before that next leg starts? You know, you could get this big strong rally and a 2-day drop. That 2-day drop doesn't get you out. So if you got in here, for example, and we had another squeeze for a day or so, that 2-day drop does that. You might get out with a break even or a little bit of profit, but do you think that's really worth the risk? I just don't think it's worth the risk, even though these are, I mean, RSI extensions, look here. That's what you've got. The last 90 extension we got, look at what you got out of it, yeah? And then look. Yeah, that's the last 90 extension. It's just not, you know, it's not worth risking it. When you've got something that is that strong, trying to short it is just a mug's game. But, you know, if you're going to use a stop, it's not a problem, not an issue. If you want to take an ADR reversal on this, no problem. But you obviously ADR reversal, use a stop. Don't turn it into a position, because you're going to get into potentially get into trouble. But equally, you know, this thing could come down. I don't know. No one knows. If we knew that, like I said, we'd be millionaires. I say that all the time. If I knew which way the market was going and when it was going, I wouldn't be sitting here talking to you now, would I? You know, it's just not not possible. So I'm going to run through everything this morning. There's no point in me looking at RSI extensions and then doing a full analysis, because pretty much everything is either extended on the hourly or it's extended on the 4 hourly. So might as well just do a rundown of every pair this morning, because everything is extended to hell. So there's very few that haven't got an hourly or a 4 hourly extension. Well, I say there is quite a few actually that haven't got extensions. Mainly the euros, because obviously we're waiting on the euro for tomorrow. So, but we'll do a rundown of everything. So ADR opportunities today, it's all Oz. So M5s. We just had a reversal on Aussie yen at 100 ADR. It's worth looking at these yesterday as well. So have a look at what they did yesterday. Pullback, push. You're probably going to get a good pullback out of that. Aussie yen, CAD yen. You know, it's stalled and it's not interested. So all of these could well just turn around and collapse today. Good opportunities across the board. Swiss yen's extended. See, the Swissy could well power up and be powering up ahead of the euro announcement tomorrow, because the Swissy will go with the euro. So that one, yeah, looks good short, but you want to be out of it today. Euro yen again, strong. Pound yen, 100 ADR, all starting to weaken in London. Look, so London's not going for it, which is a good sign. If you're in any of these short and you need to, and you're position trading them and you need to get out, aggressive positions this morning are definitely worth considering. So I'm just watching what's going on with the. We're on Wednesday, so pretty big opportunities for shorts on all of these. But yeah, just take them with a pinch of salt at the moment. We don't know which way they are going to go, and with all these rate announcements that we've got at the moment going on, we've got one today and another one tomorrow. There's a lot of potential volatility in the market, and don't forget, when we get the market speculators reshifting, so the overnight rate, just to put it into context, when the institutions, the banks, the hedge funds are scorecarding for the traders, so the analysts basically run a scorecarding system, they pass that scorecarding system onto the traders then make the speculative trades, long or short, dependent on what the outlook is for each of individual currency based on a scorecarding system. So the scorecarding system works on lots of different news events. So what the interest rates are, what the PMI figures are, what the CPI figures are, what the unemployment rates are, etc., what the building permits are. There's lots and lots of news events that will have either a positive or a negative impact on the potential monetary policy shift that the banks will make in the future. That scorecarding system will give them a overall long or short outcome. Simple as that. If it's +2, we should be going long on that currency. If it's -2, we should be going short, and obviously variations of that. The interest rate is the largest contributor to most scorecarding systems and institutions. So you will find that this, if let's say there's 10 items of news that make up the scorecard, they will all have a weighting. The interest rate will have maybe 20% of the scorecard weighting. I don't know what the actual figures are. It's going to be different for each institution, but it's a large portion because it is the main monetary policy driver. The interest rate is what controls inflation. Inflation is what controls a currency either appreciating or depreciating. So this is the main driver that is, right, okay, we've gone way more than the 0.75, which means that inflation should flatten out because we're getting on top of it. Yes, it's going to be bad for short-term investors and savers, but overall it will get on top of inflation, which will bolster that currency. Therefore, we need to shift the scorecard more long than short. If that takes them over that line, we will suddenly find a rally start. And that rally could last for months or weeks or years, as we've seen with the euro. Yeah, euro's been scorecarded short for ages. It's coming down like a truck. Yeah, that's because the institutions have had no faith in the European currency because everything's been going wrong. So that's why you get that happening. And that is potentially this week, tomorrow, going to shift. Yeah. So to do that, what the institutions need to do is free up funds. And what they will do is they will change their outlook and change their portfolio so that they can put more investment into what they think is going to make the most money. And if at the moment they have lots of money in the yen and they are moving it into the euro, what's going to happen to the yen? It's going to collapse because a lot of investment comes out of the yen. Therefore, the yen depreciates. So that is potentially what we are seeing happening with these yens now. And if that is the case, there's no reason why this should not continue in the way that it's going at the moment, and everything going mental against the yen because the yen is just depreciating because all the money's being pulled out of it. Same thing as we used to see when the yen was a safe haven currency. Stock market crashes, everybody pulls their money out of the stock market and puts it in the yen because yen's always been a very safe place to put it. It's not at the moment. Therefore, no one's using it as a safe haven. Therefore, the yen is just collapsing, which means everything goes up against the yen. It's just basic economics. And how, there's an infinite supply of money around, and it has to be positioned somewhere. And at the moment, I feel that that is what is happening with the yen. And we've seen it happen with the yen, obviously, for a while now. So, like I said, these are all short-term, M5, M15, today, maybe a couple of days, you might find we get down days in. But from a position trading perspective, be aware that is what you could get happening, as we have had happen here. Look, yeah, we look at it on the 4 hour when we've been at this extended, so we're 90s on the 4 hour. Yeah, I mean this is the hourly and the 4 hourly, but we're at 90s. Look at when we've been at 90 before on the yen. There. Yeah. So what did we get there? Nothing. What did we get there? Nothing. What did we get there? 8 hours. And we went through the roof. And then we got a pullback. But it's too late. You got in here. You didn't get exit. You're out. You're squished. You're in a squeeze. What did we get there? We got a drop, an accumulation, and a drop. So that one would have worked. What do we get there? Probably about 3 or 4 days of pain and then a release. What are we going to get here? I don't know. Is it worth taking the risk? Would it not be much better to get in anywhere down here with the trend? Yeah, you get in there, you get out. You get in here, 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 you get out. Getting anywhere up the top there, it's very, 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 very difficult. And this is why this 24 and 72 are so important. These are what the banks are doing. These are the quarterly and the monthly average prices that the banks are driving. We want to stay in line with them because they know what they're doing and they're the ones that are in control of the market. So stay in line with them. So just be careful. But there's nothing wrong with trading both directions, obviously. Everything goes up and down. Yeah, if you'd have taken a short up there this morning, well, hey, M5, you've tanked, made loads and loads of money. Yeah. Reverse alerts obviously are going to kick in later because we're waiting for market structure shifts, which are looking for longer term moves. So when you get them, there's a high probability that you're going to get a decent risk reward out of it. And potentially, a big drop because we're very extended, but just be very, very careful with them. Yeah. So just word of warning on them. I'm certainly not taking any, only because I don't want to scalp. today because I've got to get on top of this oil and US dollar Swiss situation, which is my priority for the day, which is holding nicely. Support rectangles holding nicely at the moment. We've just had a retest on oil. So if we can break this high, first target and second target there, if we can break that level, we've got a very good chance of getting a run today. But who knows what the hell is going on with oil. It's a mess. I'm just taking a short on the DAX. So gap fill's done for those wicks. Market's not happy. We tried very hard to get the gap fill. We tried again. We finally got there, and then we completely ran out of buyers, and the sellers have stepped in for the last 10 minutes. So if we get a low break today, we've got a very, very good probability getting a rally to the downside this morning in London. This markets in the US are doing very similar. So let's start with, we've done oil already at the beginning. So let's start with the indices. So DAX, obviously we're looking for shorts. The drop we had is played out very nicely. The market structure on it is kind of textbook at the minute. So looking for lower lows today, and we're coming down into this potential area of support. So we're basically forming a wedge. So contraction and then drop is on the cards. Whether it's going to muck about and how many days it's going to take before it happens, don't know, but definitely want to be short on it at the moment. We've had 2 up days, but both of the up days, if you look at them, this one we didn't manage to get the bullish engulfing on it, and then we got a very nice hammer shooting star yesterday. So big push up and rejection by the market, and so far this morning we've tried to push up and we're starting a rejection. So this could form the start of a very nice 3-bar reversal, in which case then we're opening the floodgates up for a drop to the lows. So we're looking at this level here, which is 125.90 stroke 126. Basically it's 126 round number if you like. That's the level that we're interested in breaking down below. We need to get down below that level. If we can break that level, we've got a clear run down into these lows somewhere. So a good run down to potentially 125, 150 ADR before we're going to find some limit orders. So there's going to be a lot of limit orders sitting down there. A lot of liquidity sitting down here, either in the form of potential stops from this move or from people wanting to buy a triple bottom. There's not many buyers in the market at the moment. It's quite hard for the market to get a bounce, so as we know. So I think we've got a good chance of slamming through that. When we do break this low, I mean, it's difficult to tell, but this low here obviously is the recent all-time low, which is 123.68. When we break that, we're likely to get one of these happening. Yeah, we're going to get a big candle or a big move through that level. Whether we can do it first time or not remains to be seen, but certainly that's where I think we're going to be heading. US indices, very similar situation. We've got a lot further to go on the US indices. So 11,040 on the NASDAQ. And obviously we are targeting back to pre-COVID, which is 97.71. And the similar sort of thing on the S&P. S&P, we've got quite a long way to go before we get back down to these lows. And then there's obviously a lot less distance before we get back down to COVID, which is 33.97. But obviously this is where the market is looking to go and where everybody's calling this. I don't know. It depends how long it takes to get there. But if we go into recession for a year or so, don't forget this is only, this is, what are we now? 8 to 10 months. So, you know, if you measure that 8 to 10 month move that we've had without a recession in play, and then you put that from where we are there, this leg down, so you've got that leg down to there. If we get another 8 to 10 months of this, we're easily going to break this level. You know, you could potentially be coming all the way down here. It depends how bad this recession is going to be. We've got no idea at the moment. We're in a completely unprecedented realm, aren't we? We've never had a pandemic we've got to pay for. We've never come out the back of a pandemic into a war before. We've never had global energy restrictions like we've got at the moment. We have had inflation going to where it was, and the market collapsed. We know that. So there's a lot more potential downsides, I think, at the moment than we've ever had in the past, certainly in my lifetime trading anyway. So I think we can go lower, but for the moment, concentrate on just looking for short opportunities on pullbacks on everything, basically. So if you see the market rallying for a couple of days, it's worth taking some short opportunities until we get down to the recent lows, and then obviously we'll need to evaluate. So the DAX is closest to performing that at the moment, hence obviously that's where I'm heading. I might add one onto the DAX as well, actually. Just to bolster that move. That's within an ADR. So if we break this low, I'll add in and look at getting out down there just to add a little bit more to it. Bolster the position up, because I'm not sure I'm going to get into another one on this one. We'll see. You might pull back. You know, we got this big old move that started on Friday last week, big sell-off. We have come up and we've obviously retested that already, which is where the sellers stepped in and pushed us back down again yesterday. So we have got potential to put in another small rally, but obviously we don't have that high invalidated, so we'll see. But yeah, looking for shorts on all indices. Bitcoin and Ethereum. I saw somebody posted a meme about this yesterday, which made me laugh in another in the Discord, one of the funded Discord channels that I'm in. It's basically just about everybody that is, you know, there's people taking out loans at the moment to buy Bitcoin. I feel so sorry for them. They don't understand that this thing is now tracking the indices, and the indices are going to drop into a recession. This is not going up, guys. Yesterday was the big sell-off. That's what we're getting at the moment. We're getting accumulation drop, accumulation drop, accumulation drop. No reason why this should do anything different at all. So God's sake, don't buy it. But yeah, Bitcoin as well. You know, we're looking at levels back down to where we were before everyone got rich and then lost all their money, and then thought they were getting rich again, and then lost it all and lost a bit more, and then went bankrupt, borrowed money to get in, and now are going double bankrupt. So just, you know, this thing is now an index. Treat it as such. It's coming down. Right. FX pairs. So Aussies. So the Aussie rate was normal, 2.35 as expected. The market doesn't seem to have reacted very pleasantly to that at all. So we did have a strong Canadian dollar yesterday, so that one is probably a little bit more skewed than the rest. Yeah, so we had a strong CAD yesterday. We've had a strong US, which has pulled us back down into this propulsion gap, which we are now reacting at. So nice little long potentially up into there. But the CAD is a bit of a difficult read at the moment, because it's obviously linked a lot to oil, and oil isn't doing what we would expect it to be doing at the moment. So I'm not quite sure what to read into oil at the moment. Typically, it will always be stronger than the Aussie, most of the time, generally. So I would be more inclined to look for shorts on it than longs. We haven't had anything for a while on this. Up here was the last reversal, that dropped there. So I'm still looking for that sort of movement. We are very nicely extended at the moment. You are likely to get some kind of pullback on this, but it's against the trend. So again, it is more risky. But, you know, to look back in time, that was a very weak one, but you got out on that. You know, we do get the pullbacks. So how strong it's going to be. If you're taking anything counter trend, you've just got to make sure that you get out as fast as you possibly can on it, basically. So don't get greedy on them is kind of the rule. So you have got an opportunity to go in long there. I'd much rather be looking for opportunities to go short. Aussie dollar Swiss, same thing. Swiss franc has got a very strong probability of powering up on the euro tomorrow. And again, all this that I'm saying is pure speculation. The euro rates come out as expected. I think the euro's coming down. It will probably have a little bit of a rally, but overall the market's not going to be impressed by a 0.75 rate increase, I don't think. So anything higher than that, yes, I think they will be impressed. But you know, we have to bear in mind that this could go either way. The euro and the Swiss are very heavily linked. So I think at the moment we need to treat the Swiss franc with strength. We know that the interest rate increase was positive for the Swiss. We've had no movement since then, but we have got rumblings of stronger euro. Therefore, Swiss franc will get dragged along with that, which means that the Aussie dollar Swiss will tend to come down. So again, looking for short opportunities. There was one up there. Aussie dollar yen, all the yens. So looking at where we are now, if you're a so-called smart money trader, you're getting in short now, right now. Well, depends on whether you're on M5 or M15. If you're on M5, you're already in. If you're on M15, you are still waiting. But we've just taken out that liquidity there, which is 4-hour liquidity. Quite often you'll find that will push through harder on the 4-hour chart before you get a pullback. But we're very nicely extended, obviously, Aussie yen, and we're up at an area where we are potentially going to find a load of sell orders sitting. A lot of people, everybody, you know, we're all looking at support and resistance. We're all looking at the same thing. When we get there, yeah, we all do the same thing. Doesn't mean it's going to be the move. It means we get a reaction. A reaction is all you need to make money. Whether it goes your way or not is irrelevant. As long as you get in and you get out, doesn't matter what happens after that, does it? So nice reaction happening, Aussie yen. That's at 100 ADR. The reversal that's just happened on that one. Looks like it wants to retest at the minute. Not particularly strong, so potentially you're putting in a head and shoulders pattern. Fail a lot, but hey, good chance of that bouncing down there, I think. Up there rather, Aussie dollar yen. So good opportunity there for a short, nicely extended. But again, I'm not interested at the moment in yens shorting. Not even to scalp at the minute, just because I've got too much on with the oil, which seems to be pushing fairly nicely at the minute. Aussie dollar, New Zealand dollar longs didn't quite get down to extension on the RSI for me. That's the last one I took, and I was in here. I was in all of this long, made lots of money out of it, and then it flew. I was looking for an opportunity to get in. I didn't want to take the 24 without being extended. Should have done, but hey. So we've got a nice W formation on that. So if you want to, the play on this one is just to wait for pullbacks to go long. So you could literally stick the EA on M15 on this and just say, take every long opportunity for me. And I think you'll be all right. The Aussie New Zealand should continue in its current strain and trend, which is up, obviously. So the Aussie dollar had positive news, i.e. the rates came out as expected, which tends to be positive for the currency. And New Zealand dollar, we haven't got any news on for a while. So there's no reason why we shouldn't continue in an uptrend on this. It's not the particularly fast one. It's 53 ADR. So you're not going to get in and out of this thing very quick. but any kind of pullbacks, you can get into long opportunities on it. High up there is probably where you're going to find resistance at some point, but you know, look how long it's taken to get down to here. If you're playing a long game, expect a similar sort of time scale on this. So this is what, week and a half, back up to the highs. But you know, for me, it's just not, you know, it's never got extended. We had an hourly opportunity there, but that's only just starting to play out. There is potential for this to come down another couple of ADR really, but if you look at that on the 4 hour, you know, this is what I'm looking for. Something in here, that's what I want to take ideally. But up to you on your level of aggression. You know, some people get in faster than others, and you can make a lot more money the more you get in, obviously. So see what happens with that one. But that looks good as a long. Aussie New Zealand. Aussie US. US is very, very tricky at the moment. I'm really interested to see what Powell says tomorrow. I think he's going to use that opportunity to pump the US dollar potentially. So based on that, we may well see a drop in Aussie US tomorrow. So this is kind of a neutrally long against a not sure long at the moment. It's a very difficult one to get a bias on. We are coming down to a very good level where we're going to find potentially some support here. If we crack this support though, where are you going? Where are you going to stop? There's nothing but look out below kind of price action potentially. This is COVID obviously. So I don't quite know where you're going to go if this support doesn't hold, which means it is a much riskier opportunity for a long. So we are extended on the daily. You know, when you get extended on the daily, usually the market wants to rally from it. Yeah. So again, we've got a very good opportunity for a long, but if the long fails, I hate taking these double bottoms on daily charts when you know you're coming down to monthly, weekly, or whatever lows. When they don't hold, there's literally no technical analysis you can do to say, right, this is where I think we're going. So you just got to hold on tight and scale in and hope that you get those pullbacks. And I don't like trading on hope. It's got me stung in the past. So it's a good opportunity, but I would want to see it really come down and test this level. So if we can get down to here today, in fact, I'm going to put an alert on that level there. If we can get down to that level and it pierces it and breaks back above it, I'd be interested in longing that. Because I think we've got some potential volatility on the US dollar coming. It's either going to go one way or the other, isn't it? And if it does go the positive route for the US dollar, then I will get out of it and it will be a stop loss position. But that's really all you can do with the Aussie US at the moment. It's in a bit of a precarious spot. But due, obviously, some kind of pullback move at the moment. It could only just go up to here, though. You know, so you could be looking at only getting sort of 60 odd pips out of it, which is not bad. If you got him with the stop right now, I don't know if you had a reversal though. Yeah. So if you got him right now, there's your stop. You're looking 18 to potentially 60, 80 pips to the upside of movement. So not a bad opportunity for longs, but obviously be prepared. You could do a kind of split long here, so you could take one there, see what happens and stop out down there. So put half your risk on there, half your risk on if it comes down to there. And then obviously you'll have an average position somewhere around there. And if it goes your way, it's a nice little trade. But CAD Swiss sideways, mess, no idea. CAD Yen, very strong long. CAD, we had a big old rally on the CAD. So the pound and the CAD came out of yesterday the best of the lot. Huge moves. 200 pips, 200 ADR move on the CAD Yen, 250 odd on the pound yen. So yeah, some really big plays yesterday. CAD is a long for me. Yen is a short. Therefore, it's exactly where I want it to go. But all it's done for the last couple of weeks is just grind, not give any opportunities to get in at all on any time frame really. You'd have to be playing M15 RSI extensions to get into this thing over the last few weeks. You'd have had a couple of opportunities. I don't take them myself, but from the scalping perspective, RSI extensions to the downside, M1 reversal alerts. A lot of people do that. I just don't like trading the chop down there. So yeah, it's a long, as you can see. So any kind of pullbacks on it, potentially we'll be looking for opportunities, but I don't think we'll ever get one. And if we do get one, there's also a high probability that is caused by Japan stepping in and going, right, we've had enough. And if that is the case, might shift bias to short. So just staying clear of it at the minute. Everything to do with the yen. Just because, couldn't find an opportunity to get in. Breakout traders are having a great time at the moment. This is the age-old argument, isn't it? Do you want to be a breakout trader? Do you want to be a trend trader? Or do you want to be a mean reversion trader? Those are the three main types of trader. The breakout traders go no, 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 no when that happens. The trend traders go no, 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 no when that happens. The mean reversion traders go, oh, damn. And then when you get into a range, all the trend traders get chopped to pieces. The breakout traders get baked out and chopped to pieces. The mean reversion traders go no, 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 no. Doesn't matter which one you pick, you're going to be wrong some of the time. You can't pick them all. So yeah, off to the races. I'll cover all the yens quickly while we're on the yens because they're all the same story. But euro yen is one of the only ones, and the pound yen that have got resistance above. Everything else has no resistance. We are at all-time highs. We're off to the races. Your guess is as good as mine when the brakes are going to get put on. Euros, we have got some kind of resistance coming up. We've just broken out above that high at the moment. So there's liquidity sitting potentially there, although that is a long old drop and very fast. I'd be very surprised if that move there was not virtually everybody getting out of that short. So I don't think there's a lot of liquidity there. Therefore, this thing's obviously just pumping through it at the minute, and it's quite possibly going to carry on. There will, however, be limit orders sitting up at these highs, ready to short this, especially mean reversion short-term speculators. So up here potentially is a good area to start looking for short opportunities, which is going to be, so the triple top high is 200 ADR today. You've got another high, couple of highs there, which is around 175. So potentially somewhere around there. So I'm going to set an alert at 175 ADR. If we get there, we get there. Fantastic. If we don't, we don't. But that's where I'd be interested in potentially looking at shorts. The problem is, by the time we get there, it's probably going to be tomorrow. What's happening tomorrow? It's the rate announcement. This thing is either going to go crazy that way or crazy that way. So do I really want to be getting into potentially a triple top bounce short when they're just about to release the rates for the euro? I don't think I'll do, but we'll leave it there and see what happens. Rocky, breakout traders enjoying the moment. Yeah, exactly. Someone's always going to win. Don't forget, this is a game of two halves. Every time you take a long, someone somewhere else is taking a short. When you lose, they win. When you win, they lose. Yeah. There's always somebody taking the opposite side of your position. Normally a bank, and they don't normally care because they just accumulate it with the rest and make money on the whole lot in one go. But and this is why I find I'm not in many groups. I'm not in any Telegram groups apart from one other. I'm in a few Discord channels, but the reason I stopped following and joining all these groups is because of the toxicity you find in them. You've always got that one bloke going that's played that there and done that, and he's going nah, 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 and there's someone going, oh, this is going short, and there's someone that says, oh, this is going to go to X, Y, Z, and it's like, you've got no idea where it's going. You're just picking numbers out of the air. I've got no idea where it's going. Anything. But like I say, if I did, I'd be a millionaire. It doesn't work that way, but it's all the toxicity of people saying, this is going to that, this won't turn until you get there, you get to this level, and then that's going to happen. It's like, you haven't got a bloody clue. It's rubbish. But at the moment, all the people that long to the yen will be in there celebrating, showing all their memes of Jordan Belfort and all that sort of stuff. You know, let them carry on. They'll come crashing down at some point when it goes range bound and they start losing everything they've just gained. But that's trading, isn't it? That's what happens. We win some, we lose some. Yeah, euro yen looking for hits up to the upside there. Pound yen, there's a lot more levels. Pound yen is a lot more complicated from a technical perspective at the moment. There's a lot more levels we can see on the pound to reach for. This one is the one that's equivalent with the euro at the moment. So when we get up to this, this area here, hello, there's a possibility of limit orders kicking in. That's an RSI extension. So we've got an RSI extension of astronomical proportions followed by an RSI extension of pretty big proportions. There I'm interested. If we haven't done a profit take until we get to there, I'm interested, definitely. But it's going to be a short trade with a stop on it. So, Sammy, I mean, you see, had one sell ADR down and my sell limit got tapped on the tip of that wick on US dollar CAD. I'll look at that one in a minute. But yeah, pound yen. So same story. This one's a much, you know, the pound and the euro, because they've been so weak, they are the ones that the yen has actually made some progress against. Therefore, we've got upside targets, and the pound we've got a lot of upside targets as well. So again, if the euro spikes, the pound will likely get dragged along with it a little bit. This is a reaction yesterday to Liz Truss getting in and putting into place the fuel subsidies. Well, not putting in place, announcing what they are planning to do. Nothing is in yet, but they've been announcing what they're planning to do, which obviously has a positive impact on inflation, because it means that we will not get as poor as we thought we were going to get at the moment, but it is a knee-jerk reaction. So nothing has actually been announced yet. She hasn't come out and said in stone, this is what we are definitely doing. When that happens, then yes. If that goes, then I think, yeah, right, okay, that's fine. I can see why that's happening. This is an overreaction at the minute. So I can see the market now actually waiting for it to happen and then going, yep, okay, that's fine. So it's positive. Let's take profit on this move before we start a new leg. Either way, I think you're going to get that reaction to the downside. The elastic band is fully stretched. And at some point, everybody in here, if they don't take profit, is going to want to hit that button so hard they will take profit. Yeah, you're going to get that move. Yeah, the bigger the squeeze, the faster the spring back. Yeah, squeeze, get out. Squeeze, get out. Yeah, squeeze, get out. As soon as everybody starts taking profit on that move, people will add to their shorts, all the speculators that want to short trade, and then they will get out somewhere down here when everybody's finished taking their profits, and then the next leg can start to the upside. If she announces what we think she's going to announce. And if the yen, Groda, does not step in and do something about the situation they're in. There's so many variables at the minute. It's unbelievable. You know, in and out as fast as you can. Get it in the bank. US dollar Swiss is coming down. And oil is thinking about going up. Not a massive amount of movement so far today. New Zealand dollar yen. Same story with the New Zealand dollar yen. We're not quite there. Quite near as damn it actually, 86 800 level. It's come straight off of 100 ADR, just about. Hasn't actually triggered ADR, is it? No. 77.6 on a 78. Can't get much closer, can you? So yeah, we've got this level here, and then we've got another level at the highs there on that one. So there's a few turning points potentially on this. There's no news on the New Zealand dollar forecast. So, you know, these are both Asian pairs, obviously. They both move in Asia. So you tend to find you get much more accumulation, but equally what goes up must come down. Yeah, climbing up stairs, falling down the elevator shaft, which is exactly what we've been doing. So I'd expect at some point a profit take move on this one. Swiss yen's just hit 150. Still going. Again, still going. Just off to the races. And then obviously US dollar yen is the other big winner. So this didn't stop. We broke that high. We thought about reversing there. Everybody got in short. They took out that, and that's just gone crazy. We had a big strong push on the US dollar and the CAD, and we've had that weakness off of the yen. So this thing's gone absolutely tonto. You know, anything above 90 is, you know, virtually unprecedented. If you put the 90 level on and look at how often we get there. Yeah, it's a rarity to get to these sorts of levels. Yeah, this is literally as far as we go. We're just above it now. We're at 91 something. We just do not get above 90 very often. It's a once in a year event on the 4-hour RSI. It just does not happen. So when you get there, one of two things is going to happen. You're either going to go into an accumulation, as we did with this one here, accumulation pump, or you're going to get some kind of profit take move before the next leg starts. Yeah, if Japan doesn't step in and do something about it, which will get some kind of movement back down to the 72, which is obviously a huge drop, and it can happen very, 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 very quickly. So it's either, you know, and this is part of trading and part of your decision-making process. This is either it here, or it's not. And if it is it, you've got one hell of a risk reward on your hands. If it's not, do not position trade it. Get out with a stop. Yeah. So if you got in short now and said, right, or wait to the reversal, look at it on the hourly maybe. Yeah, getting down there somewhere, you're going to have something like 180 pip, a 1.5 ADR stop loss on that. If this is where Japan steps in, your reward could well be somewhere in the region of 8 to 1. If you can hold it. And this is the thing, you know, you've got to hold this. You know, we're not built to sit and watch our P&L get bigger and bigger and bigger without going, nope, I want to take that and go on holiday with it. We're not built to do that, which is where EAs come in. They just do as they're told. But yeah, you've got a potential stumbling block there. By the time we get there, the 24 will have come back up. We could be looking at something like a 24 bounce. Or, you know, as I say, we're going to get a flag and pump. You know, no idea. But, you know, when you get to these sorts of levels, it's very rare the market will continue to push as fast and as hard as it has. So you've got that 66% chance of either an accumulation drop, an A-shaped recovery happening. One of those two. There's more odds of that happening than there is of it going like that, especially after a 220 ADR hit and a 150 ADR hit. The market's shot. It's exhausted, and it's likely to come down. But yeah, don't use a stop. Don't get yourself into strife on it. So there's all the yens covered. Did all the Aussies. CAD Swiss, covered that one. CAD yen we got to, hadn't we? Swiss yen. So let's look at the euros. So euro, obviously tomorrow is the big day. We're waiting for the finance rates, 1:15 tomorrow afternoon. 0.75 increase on the cards, and suspect, got a horrible feeling that's what we're going to get. There's nothing to base any historical information on because we've been flat for 6 years. 6 years? Can't remember. I can never remember how long it is. When did we go flat? Yeah, 2016. So 6 years, 6.5 years, we've been flat on the euro. So the last time we were forecast at 0.25, and the market was like, "You're having a laugh, aren't you? Inflation. You just want to put it up by a quarter." So they went, "Oh, all right, we'll go by a half." And then the market was like, "Yeah, really?" And that happened, the euro. So the bank have stepped in and gone, "Right, we'll go 0.75 this time." You know, compare that to what the rest of the world is up to at 3.25, 2.35, etc., etc. That's still not cutting it much, is it? So I suspect we might get that move tomorrow. And if that is the case, we could see some decent movement on the euro, and where it will go, nobody knows. We could have a fundamental shift, which puts us into an uptrend on it. We could have the market spike and retrace and accumulate, because yes, it's better than it was, but it's still not good. If they come out at expected rates, we could get a spike and a drop. I don't know. We need to wait and see what happens with it. But either way, I'm not really trading the euro until we've got those rates in, and we've got some idea of what their long-term monetary policy is, which we will find out tomorrow. So at the moment where we are, we've got a pretty decent level of resistance coming up here. So we've respected this level quite a few times, and we're just approaching that level again. So we may find some resistance there, but when you've got a fundamental coming out like an interest rate, support and resistance doesn't really come into the equation. The only thing really that you can be interested in is levels that they may come and grab liquidity from. So down here, for example, after all these longs, if we get a drop tomorrow, or if we get a positive rate increase tomorrow and they take it a little bit higher than expected and the euro drops down to there, that's just a liquidity run before they run away with it. There's nothing to the upside there on any shorts, I don't think. That would be it. Where there's going to be enough liquidity for them to run. So I think tomorrow we're just going to see a move start in a direction. So I'm not interested in any CADs, any euros at the moment. At the moment, I'm still short, obviously, until they come out with something fundamental and until the market shows me that, yeah, we really like that rate increase. I'm going to be shorting this as normal. So Euro CAD, again, shorts. Euro Swiss is a big short. Euro Pound is a mess. At the moment, the euro and the pound are a bit of a confusing vehicle. I don't trade it much because of the ADR on it, but we've got a lot of push and pull going on. We've got a lot of push and pull on the euro and the pound because of all sorts of things that are going on in their fundamentals at the minute. So your guess is as good as mine on this one. We had a very nice extension up there, which has played out very, very nicely. If you took that euro pound short, you would have got into it somewhere around there and scaled in and out down there, hopefully. But yeah, not really interested in any of these at the moment until we've got that rate announcement in. Euro New Zealand, I'm already in a short. I can't do anything about this one. I've got an aggressive position about to trigger. Has triggered. So I've got an aggressive position here, which has just triggered this morning. Stop above the high. Yeah, so we've basically just taken out the liquidity of anybody that shorted that. Anybody that shorted there, if they were sensible, put their liquidity above that high. That's just gone. So I'm getting in aggressive here with a view to getting a move down, hopefully at some point today, so that I can do something with this. I'm going to see what happens. If it pushes today, you know, I'm in the hands of the gods at the minute with the euro. So pound yen's just hit ADR 125, still going. So yeah, I'm in short on that at the moment. I seem to remember when I took the short on this, I seem to remember saying I'll probably regret this one because there's a chance that the euro is going to strengthen. And if I'd have listened to myself, I wouldn't be in it, but I'm in it. So I've got to do a bit of drawdown control on this one, and I will probably use any profits I get from oil and US dollar Swiss today we'll probably use to try and do some work on this one, on the Euro New Zealand. I'm only in 1.5% at the minute on it. So I'm not particularly worried now, but obviously if we do get that fundamental rise on the euro, then that is going to get substantially bigger, substantially faster. So I want to reduce some position sizing on it. So you can see I've got a lot of stuff, a lot of these aggressive positions are playing out at the moment. If these continue to play out today, I will use these to work on that. I'm not looking to make a profit today. I'm looking to reduce my risk, really. So, but yeah, and if obviously if we do get the euro drop and pull back today, some description, I'm going to have even more to play with. So, in fact, it's getting a bit aggressive, that, isn't it? What have I got on it? So that 3.5 is half of the 0.7 that I had. So, yes, right, it's only a quarter of an ADR. So, if this does break and we get the reversal alert on M15, we've got these lows here. Yeah, and until after those lows, that's the next level of support, which is where this propulsion gap is. So I'm going to add a second position in there and hope that we get a fast drop down into this support. We'll probably get a bounce off of that support. So at that point, I can reduce these stop losses down somewhere into there to reduce the risk on these aggressive positions. We'll either get that and I'm quids in, or we won't get that and I'll have a very small loss on it, but it's worth the risk. So I think we might get the market pull back and entice some shorts in today to put some liquidity up there for when we run tomorrow, if we run. So just trying to think what the banks may be playing with here after taking that liquidity. If they have taken that liquidity, then they'll likely run with it to make money on it. So, don't know. We'll see. We'll see. Morning, Andy. Just done a bit of scalping on US dollar Swiss and US dollar yen shorts, taking my profits and running. Cool. Yeah, US dollar Swiss is going well at the minute. Euro New Zealand I've covered. Euro US dollar. So Euro US dollar, we had this level down here, which is really old level. Really old level. Anyway, we got this level down here, which was potentially going to be acting as support, which it has very nicely. We're having a bit of a push at the moment, a little bit of weakness on the US dollar. We got this flag, which has broken down, but we haven't really got very far, which I'm not surprised because it's obviously euro. The market's not going to suddenly put large positions into the euro ahead of a rate announcement. So this one obviously is a massive short at the moment based on fundamentals. Again, if fundamentals shift, it won't be a short anymore. So we need to wait and see. There's no point in entering a euro US dollar for any type of position trade down here ahead of the rate announcement. We need to see what the euro is going to do. So it's a short. If they don't go super strong on the rates, it's still a short. US dollar Swiss. Let's have a quick look at US dollar Swiss. So I've got a target at ADR and 125 ADR at the moment on this one. So this propulsion gap there, I'm targeting above that and below that. See if we can get continuation on that move. Very nice drop off. Is that Swiss franc or is that US dollar? Hard to tell that. I'd say that's US dollar. Yeah, of course it is, because the yen's not going to move, is it? Because the yen's too weak. So yeah, that's US dollar weakness, which means the indices should be pushing. Yeah, we've got to push on the indices at the minute. Probably the DAX as well. Yeah. Typical. Right. So there's your euros done. Pounds. Next week is the pound. In 50 minutes, we've got news on the pound. Where are we? There. So we've got some pound news coming up this morning in 50 minutes. We may get a bit of volatility there. But next week is the big one. We've got the announcement on the rates next week. So 1.75, we haven't got the forecast. We get the forecast on Monday. So we'll see what happens with that. But again, you want to be cautious if you're going to get into any positions on the pound, because we could see movement on it. I suspect we will see some temporary strength, but not particularly strong pound. So there is a possibility this week we'll get a bit of a pullback. As same as the euro, you know, in the run up to the announcement tomorrow, we've seen the euro gradually increasing, which is basically speculators long term exiting those short positions in case we get that. If we don't, they will add back into those positions, obviously, and it's going to be a very similar move, I would suspect, on the pound over the coming weeks. We had a bit of a pound strength yesterday. I'm in short. I've only got the one short on this one at the minute. I'm not going to get into another short on it unless we get some push up above yesterday's high. So if we push up above yesterday's high, I'll be taking a second on that this morning at some point. But I like it short. We've got the Aussie dollar rate announcement came out as expected, which is bullish Aussie. The pound is bearish. So at the moment, business as usual is that. So therefore, I'm short. Pound CAD, same thing. Be looking for short opportunities on this. Again, I want up here somewhere. I want some kind of extension on it. We haven't had anything for ages. Just not getting extended at all. So yeah, very, very difficult. If you look at these, all of these, yeah. I'll quickly go for the pounds actually, and then we'll have a look at that RSI a second. But pound Swiss, there was something else I wanted to discuss today. Oh, what was it? No, can't remember. Oh yeah, the my Forex funds account, which I blew yesterday. That's what I was going to discuss. I'll go to that in a minute. Pound Swiss short, Swiss franc long, based on the rates and strength of the Swissy. Pound is short. If the euro strengthens up tomorrow, Swissy will also get a bit of a boost. That thing's coming down. Again, no opportunities really on this one for a while now to get into short opportunities, short positions. We've just been accumulating and then grinding and then accumulating and grinding. It's just not had any pullbacks. Summer trading month, it's just been a bit flat. Pound yen still going. Covered this one already. Looking to target there. Pound New Zealand shorts. This one's not getting into too much of a bad position actually. I'm in the pound odd, so I'm not going to take this, but obviously pound odd is a short, almost extended on the RSI. Pound New Zealand, same thing. It's, you know, these two move in tandem a lot of the time. The reason I've chosen the Aussie is because of the rate announcement rather than the New Zealand, which has got no news coming up. But you've got a level coming up potentially there. You've got another level coming up there. We're in the 24.72 zone, which is great area for pullbacks. And we're almost extended on RSI. So there's a good looking opportunity to get in short here. Lovely rejection actually showing on the 4 hour at the moment. M15, you'll have had a reversal alert. You could update? Oh, that is updated. Oh, we just made a new high this morning. Right, okay. So we literally just made a new high. They've just taken out the liquidity. So you would have had the reverse alert in there this morning, but we've just taken that liquidity out. So 4 hour is pretty nicely extended. Hourly, we got extended. Nice M pattern there. And we're just about to get extended there. So we're rejecting very nicely at the moment on the 4 hour. hourly is just liquidity swept. So looks good for shorts. Yeah, market structure. Is looking good for short. And pound US dollar. Again, at the moment, this is a short until we know otherwise. Again, this is how the euro started its little run up. We had a 4-hour RSI, 4-hour reversal alert, then a very, very deep pullback. And then we started that grind until the rates. Now, obviously, we've only got 1 week to go until the pound rate. The euro had a 2-week rally ahead of the rates. So it's a little bit late, this one. Whether or not that is going to... so I'm just putting a stop in place on something. This is going to rally or not from here, difficult to tell. But you've got a lovely 3-bar reversal going in at the moment. Nice big push down. Indecision, strength. So yeah, really nice level to start getting in for a long, but it's obviously completely counter trend. So you really want to be using a stop on it. Otherwise you have got the potential to be stuck in that for a while. New Zealand's strong on the back of the Australian announcement, but no news on the Aussie. So Canadian dollar stronger than the New Zealand dollar. We have just got down to a level of support on this one, but again, I'm looking for short opportunities on this at the minute. We haven't actually got down there either. So we are extended. So counter trend, you'll be looking for a little bit of a pullback. So on lower time frames, there's a good opportunity for you to get into some potential longs, but don't look to hold it for very long at all. You could well just get up to, difficult to pick an exact level on this, but somewhere around there. Yeah. So this zone potentially could act as where the sellers are going to step in and push back down from. So not really that interested in that. New Zealand dollar Swiss is a short based on Swiss franc and potentially on euro strength. Don't want to be shorting it down there. New Zealand yen we've covered. New Zealand US at the moment is a short until we get any indication that the US is going to be doing anything different. Looking for short opportunities. And the US. So the US, basically US dollar CAD is the tricky bag of monkeys at the minute. Don't know where that saying came from. My brother-in-law uses that saying, tricky as a bag of monkeys. And it's basically, if you put a load of wriggling monkeys in a bag, it's quite hard to hold the bag. One of the weirdest sayings, but for some reason it's stuck in my head. But this is a tricky pair at the moment because you've got a potential bias long against long. If you've got any other sayings that are weird, let me know. I like weird sayings. Useless as a chocolate fire guard is the other one I use all the time. Useful as a chocolate fire guard, rather. So this area here potentially is a good resistance. We've had the reversal out on the 4-hour, pulled back down. We're just rejecting on another retest at the moment. So it's looking like it's running out of steam. But again, the CAD's not really got that massive strength at the moment based off of oil, which we would expect and hope we were going to get. So it's a tricky one to decipher at the moment. But I would be more interested where we are now in shorts. Just because I get the feeling we may go into a range on this. But again, you just got to bear in mind what's coming up on the news. You know, we've got Powell potentially pumping the market on Thursday. We've got PPI coming out next week. There's always a lot of, we've got retail. There's a lot of potential bullish news ahead on the US dollar, but we just don't know. So the CAD at the moment is not doing what it should do. So it's just a tricky one, but you know, you can see what it's been doing. At the moment, we're in a very, very, very weak uptrend on it. So if you want to be super safe on it, you want to be taking longs down there. But from a mean reversion perspective, if we're going to go range bound, that's what you're looking for. if that doesn't work as a short, the problem you have is where you're going. You've got really the next potential resistance level, a good 3 ADR away. So if this is going to push, you've got a fairer way to go on it, haven't you? So it's difficult. As much use as an ashtray on a motorbike. Yeah, that's a good one. I like that one. I've heard that one before. Depends how big the screen on your motorbike is, to be fair. It might not actually... mind you, you can't smoke through your helmet, can you? That's why. US dollar CAD. US dollar Swiss, I'm short. At the moment, we've got that lovely quadruple top. Just taking all the liquidity. So this is a textbook market maker move. It's running all the liquidity on every single short for a week. And these, if they work, they come down hard. Like a... I'm trying to think of a funny analogy now and I can't. They come down like... no, I haven't got any that are clean that I can say. Like a tart's knickers is what I was going to say, but I shouldn't say that. Come down hard like a bag of spuds. So yeah, we've got potential big strong move on the US dollar Swiss today. If the market, you need to bear in mind sometimes we get positioning on the market where speculators will put in place positions ahead of the news event. So, it's like us building a position when we are expecting a long to happen, which is what we tend to get in the accumulations. So this could be building a position, come down like a house of cards. That's a good one, Andy, as well. Yeah, so basically we could be seeing pre-speculative trading on the Swiss franc. So if we see the euro pump today and the Swiss franc pumping today, that's basically people putting positions in place ready for an expected higher than normal interest rate increase on the euro. So they want to be on it before the move happens. So, I don't know if you weren't in here, you probably won't remember, but obviously you won't remember because you weren't in it. But you've got this bell curve of traders where you've got the vast majority of traders get into positions after the move has started. And then you've got the early adopters who get into the move here. So the early adopters are the people that are pure speculators, the institutions that are pure speculators, where they're saying, right, we're going to bet on an increase higher than expected on the euro. So they will start entering their long positions on the euro really far ahead of everybody before the market has made any kind of indication of which way it wants to go, which will drive the market up ever so slightly in the hope that after the early adopters, you get the speculators coming in and going, right, looks like the euro is going up. Someone must know something, and that pushes price higher. If that works, we get that massive spike and the early adopters make an absolute fortune. The rest of the traders, after they see that spike happening, start to get into the trade and they take that much. Yeah. So if you look at what you stand to make as a trader, early adopters make that much. People that get in when they see the move starting, higher risk traders, make that much. Most of us make that much. Dumb money gets in there, doesn't make anything and gets stopped out. Yeah. So what we could well see today is early adopters starting moves and some big moves coming in where they're loading up in the anticipation of the move starting on the euro. If they're wrong, they're wrong. If they're wrong, the likelihood is the euro is going to do something like that. So they're not really going to lose a lot of money anyway because the move will have already started. But anyway, that's just what may be happening. Again, no idea what's happening. No one knows. Not even the banks know. You've got 10 banks control this entire thing. They do talk to each other. They're not allowed to. They do. But they are, don't forget, at the end of the day, all trading against each other. if HSBC want to dump 20 million long, they need Barclays on the other side, because there's no way in the earth retail is going to absorb 20 million long. So they need other banks on the other side. So they're not always going to tell and show their hand, are they? So you don't know who's starting what move and who the right players are. You know, again, that's information if we knew, we would be sitting on a beach supping Mai Tais. So yeah, US dollar Swiss I am short on based on Swiss franc strength. I've been short on this for a while. I was looking for a continuation move on the Swissy. We didn't get it. We got a fairly weak Euro Swiss move, and the US dollar's just been basically grinding away to the upside. Got embedded a little bit more, and we're just not seeing a lot of weakness. But if you look at this entire move, there's been no profit take on it yet. That will come. Yeah, so it's equivalent to this. I'm waiting for that. Always waiting for that one ADR move. Always waiting for that one ADR push in the opposite direction. I'm done. But it's just not happening at the minute. So sitting on hands, hence being aggressive. And US dollar yen we've covered. So my Forex funds yesterday blew it. I can't show you the account because it's gone. It's all turned off, which happens very, very quick when you blow an evaluation. But basically, I was sitting in 2.7% of drawdown on that yesterday. It was going okay. I had 1.8% banked, and I got bored. And I was trying this EA out that I've been developing, which is what I call a time bomb. And what it does, it works on the 1 minute chart, and it's something I've been developing for a while, and I got back into developing. I tend to pick projects up and drop projects because I get distracted and move around a lot doing different things. But basically, the way that the EA works is it works on the market moving a certain distance within a certain time period. So within 10 seconds, if we got a move of X pips, it would trigger a short. And what tends to happen is when you get a strong move very fast, that is a large order being placed by the market. So this is, if you look at the time and sales in futures, yeah, you'll see 50 contracts come in, 100 contracts, 200 contracts, 50 contracts, all coming in short. That's a big player dumping loads of multiple orders in the market, and that pushes the market down. What you tend to get after that is a pullback and a push. So what this EA does is it monitors the market and it looks for pip distance moves within a small period of time, 10 seconds, algorithms dumping large orders. So I put this EA, I've been testing, you can't test this in the back tester, yeah? Because in the strategy tester, you've only got tick data, right? And although you've got every single tick of data, you have got no information as to how long it took for that tick data to be printed, yeah? Because in the strategy tester, we've got that slider, haven't we? Down there. This is what controls the speed. This is not real time, yeah? So you can't back test this strategy in the strategy tester. You have to test it on a live account. And that is obviously difficult to do. And if you remember on Monday, I put it on the live account and all of a sudden it started eating money and I was like, right, I'll take that off, and I scalped the money back. Yesterday, I put it on a demo account. I let it run for 2 hours and it did exactly what I was expecting it to do. It banked about 2.5 grand in that 2 hours and it was working very, very well. And I was like, right, this looks good. So I thought I'll get greedy and I will put it on my Forex funds account and I'll see if I can scalp $500 out of it. Yeah, that was my target. Right, so I wasn't going mad. I was looking to get $500 out of it. It had an 80% strike rate on the demo account, and I was like, fantastic, really good. So I put it on my Forex funds account. And you remember yesterday morning we went through that thing in the spreadsheet where no matter how good your strategy is, it will get a losing run. As soon as I put it on my Forex factory account and my Forex funds account, it lost 7 trades in a trot. It blew the account. So 2.5k in one go. So yeah, unfortunately, it blew the account. It was my fault for getting greedy, and what I was looking to do was just get that My Forex Funds account passed fast. But yeah, it didn't work. So let that be a lesson. But yeah, it was going really well. The EA's, you know, it's got a lot of promise, but the settings have got to be right from a pip perspective, and every single instrument you will have. This one's like 175 pipettes, yeah, on a move like that. That's what you're looking for on the 1 minute chart, and when that happens, you tend to get that follow through. Yeah, and all it was doing was it would get into the market after that had happened, put a stop above the high. Okay, so it had a stop loss running all the time. But what would happen is as soon as it got into profit by two or three pips, depending on the instrument, it would start trailing. So the idea is we're going to catch this next fast move and trail it. And if it pulls back, we get out with whatever we've got. What happened was I got into a range on the instruments. I put it on Euro US dollar and I put it on the DAX, and it went into a range. It doesn't work in a range because you get the fast moves and then you get the stops. So that's where the EA fell down. And I don't think there's a way out of it. You have to basically be trading it when you're not in a range. So you've got to find times when you're not going to go range bound. So I'm going to test it again at market opens. So the idea would be that it would only trade market opens, but after the first kind of 5 minutes have gone in, where you're getting a lot of large orders. So the first 30 to 60 minutes on the indices after the initial market open, I think is probably where it's going to come into its own. But yeah, so there you go. I blew it stupidly as well. But that's part of the problem with these evaluations. It's not real money, is it? $300 I've lost. I've lost the evaluation fee, which is not an issue. I've made more than that this morning already on my other account. But it's, you know. Yeah, oil's running up nicely. Decent moves on oil. So we got this high. We want this MH4 alert really. See if we can crack this Asian high today. We've got a lot of this. It's going to be a real tough slog for oil. It's got to get through all this lot. Yeah, it's 4 days of price action. It's got to battle its way through. If it's gonna go higher, that's going to be hard work. There's a lot of speculative short money sitting in here, as we know, because every time it's pushed up, it's pulled back, pushed up, pulled back. Yeah, so we know there's a lot of speculative shorts in here at the minute. We've got to battle through that. It's not going to be easy, but it's doable. It's doable. Everything's got to turn. It's whether or not this is a profit take continuation or whether this is start of a move. US dollar Swiss has slowed down as well. Right, so that's it for today. That's all I've got to cover. I'm just managing my positions at the moment. Any of these yens, obviously, just be careful with them. Be very careful with them. They are very, 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 very extended. We're almost 175 on the Swiss yen now. We've got a lot of RSI extensions, so you know, but everything that is extended here on these yens, you know, it could be the opportunity of the week, opportunity of the month. It could also just carry on doing what it's doing at the moment. And as I say, there's no fundamentals on this that indicate we are going to get a massive, we should be getting this massive yen weakness. There's money just being pumped out of the yen at the minute. What's Putin up to? We will resume Nord Stream 1 flows if they return turbine. Oh, Okay. Do you reckon this is sabotage? This is industrial espionage. I reckon the Russians are breaking their own equipment to put the pressure on everybody else. Yeah, we can launch Nord Stream 2 gas pipeline if necessary, but it will cost you. It's basically what they're saying, isn't it? Russia has no problems with selling its energy resources. To cooperate with any countries in energy. Right. So again, you know, this is all positive. Energy commodities, the market as a whole, the sector as a whole, it's all positive, which is why I am confused.com with the current oil situation. We should be getting more strength on oil. I think it may be coming, but just got to wait and see. We will see. So making a nice dent into the drawdown at the moment. I could really do with Euro New Zealand having a little bit of a lapse day today, and if that happens, I will be just about to get a reverse alert on M15 there. Nice M pattern. So looking for that yesterday's high level to break today to push back down into this gap. So that's where I would like to see us get today. So I'm going to do as much drawdown control as I can today. But obviously I'm in the hands of where the market decides to go. All right, and so have a good one. 10 o'clock pound. Bear in mind, we have 10 o'clock news on the pound, so just be aware of that this morning. And then 3 o'clock this afternoon, we've got the Canada rates. So I'll be in the Telegram group if you need anything, as usual. And then obviously back tomorrow morning at 7:50 stroke 8 o'clock. I'm slightly later quite often on Thursdays because I have a class in the mornings very early. But we'll see what happens. Anything I close out today, I will post in the Telegram group when I'm closing it. But I'm just going to try and hold as much as I can this morning and hope we start getting some of these profit moves kicking in today. All right, so have a good one, everybody. Hope you make some decent profits, and I will be back tomorrow morning, same time. And come in the Telegram group if you need anything.